Hey guys, let's talk about some really exciting news coming out of China's electric vehicle market. The latest data is in, and it's painting a very promising picture for the new energy vehicle NEV sector. For the first time in several months, retail sales of NEVs in China have once again surpassed the 1 million mark in a single month. That's right, over 1 million NEVs were sold, and that's a major milestone worth paying attention to. To put this into perspective, sales of NEVs had recently been fluctuating and often staying just under the 1 million threshold. So seeing this number climb above that point again signals strong momentum and renewed consumer interest. It's not just a slight increase either. We're talking about a 28% jump compared to the same month last year, which is a massive year-over-year growth. Even when comparing it to the previous month, sales are up 12.1%, which shows solid, consistent progress in this segment. This is not financial advice. Please do your own research. Now, according to preliminary estimates from the China Passenger Car Association (CPCA), they had predicted that NEV sales might hit around 1.056 million units, but the actual final number came in at 1.021 million units. While it's slightly below the forecast, it's still an extremely impressive figure and very much in line with expectations. A 28% annual growth rate is no small feat, especially in such a competitive and fast-evolving market. This surge in NEV sales really reinforces optimism for the rest of the year. The CPC itself has forecast that overall NEV sales could grow by anywhere between 34% and 38% in 2025. That kind of growth would represent continued dominance by China in the global electric vehicle industry. And it also sets the bar pretty high for automakers operating in this space. So what does this mean for companies like NIO? Well, if a company manages to grow faster than the industry average, say, surpassing that 34–38% target range, that's a strong signal that they're outperforming the market. In NIO's case, the company is targeting a 100% year-over-year growth in deliveries, which would significantly outpace the broader NEV industry. That level of growth isn't just good, it's a clear indicator that NIO is stepping up and positioning itself as a major leader in this space. In fact, during a recent discussion, NIO's CEO shared that for Q2, the company expects its delivery growth to range between 71% and 78%, which is just remarkable. Those are very ambitious numbers, and it's going to be interesting to see whether the company can meet or exceed those expectations. Fortunately, we won't have to wait long to find out. Insurance registration data, which often gives us an early glimpse into delivery trends, is expected soon and will show us how NIO performed during the first full week of June. All of this data matters because it tells us that NIO and other EV players in China are not just surviving, they're thriving, even in a market that's fiercely competitive. For example, just last month, in May, NIO delivered around 2,200 vehicles. That's a significant improvement from the roughly 20,000 units it delivered in May of the previous year. So we're already seeing over 3,000 more deliveries year over year, which again highlights how fast the company is scaling up. And this is just the beginning. NIO has made it clear that even more growth is on the way. The company has a strong roadmap and continues to innovate, expand its product lines, and improve its battery swap infrastructure, all of which should help it maintain and even accelerate this growth momentum in the months to come. Now, it's important to understand that this success is happening despite extremely tough competition in the Chinese EV market. Numerous automakers are fighting for market share, and many are doing so by slashing prices aggressively. Some of these discounts have reached borderline unsustainable levels, especially from established names like BYD, which has reportedly offered discounts of up to 35%. Moves like that can distort the market and make it harder for companies to operate profitably. But fortunately, the China Association of Auto Manufacturers is stepping in to address some of these challenges. Their efforts are helping to maintain some level of stability and fairness in the market, which is crucial for long-term growth. Organizations like these play a key role in ensuring that competition remains healthy without descending into destructive price wars that could hurt both companies and consumers in the long run. This environment of rapid growth, strategic adaptation, and regulatory support is allowing strong players like NIO to not only survive but thrive. So when I saw the latest numbers, I knew I had to share them with you. The NEV sector in China is clearly on a strong upward trajectory, and if trends continue like this, we're in for a very exciting year. So whether you're a fan of EVs, an investor, or just someone curious about where the auto industry is heading, this is a space you'll want to keep watching. There's no doubt that China is setting the pace for the rest of the world when it comes to the transition to clean, electric mobility, and companies like NIO are right at the heart of it. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.